end of an era as CME to close almost all floor trading for futures decision comes as activity in CME's pits has fallen to 1% of all futures contracts traded daily. Traders work in the corn options trading pit of CME Group's Chicago Board of Trade in 2012. Photo: Tim Boyle, Bloomberg News. If the last vestiges of the swashbuckling era of commodities floor trading is fading away. CME Group Incorporated, the world's largest futures market operator, said Wednesday it is closing most of its futures trading pits in Chicago and New York as electronic trading has become the overwhelmingly dominant way futures contracts are bought and sold. The move, which will take effect by July 2nd, brings to a close nearly 150 years of barking and jostling over the price of grain, oil and interest rate contracts. The time has finally come, said Leo Melamed, chairman emeritus at CME and a former chairman who helped the exchange develop its electronic trading platform in the late 1980s. It's a historic moment, but one that I think was always out there and was going to happen. Some pits will remain at the CME, including for the S&P 500 futures market and for options on futures, which have been slower to migrate to screens due to the complexity of arranging trades that incorporate multiple options contracts. CBOE Holdings Incorporated, also based in Chicago, still operates a floor for its S&P 500 index option contracts. But few of the biggest exchanges in the world still have trading floors. Some have kept them going primarily for ancillary benefits. NYSE Group, a unit of Intercontinental Exchange Incorporated, has trading floors for stocks and options inside its historic building in Lower Manhattan. However, one of the reasons ICE has kept the floor is because companies issuing shares to the public enjoy the marketing experience of ringing the bell above the hubbub of traders. The Chicago Board of Trade, which CME bought in 2007, opened its trademark octagonal trading pit in 1870. The Chicago pit gains a central position in the global agricultural commodities trade, its bellowing traders helping set world benchmark prices for corn, cattle and pork bellies. The pit later expanded into contracts based on currencies, interest rates and stock indexes. Business in the pits peaked long ago, with floor traders, clerks and related staff dwindling to about 1,200 in Chicago in recent years from a high of more than 10,000 in the 1990s. CME last year traded 31 million futures contracts on its floors in Chicago and in New York, where it runs the New York Mercantile Exchange. On its electronic Globex platform, 2.66 billion futures contracts changed hands. The futures pits had lost their dynamism in recent years, but they were once a frenetic hub of activity that was seen as a symbol of capitalism. The cavernous room roared to life at the start of the trading day. https://plus.google.com/hangouts/_YTL/SSP_LV9AXJOYUQ1PP. It may have looked crazy, But it was a highly organized system where people transacted billions of dollars worth of trades with a gesture, shout and a handshake, said John Lodian, a former futures trader. The CME decision is likely to renew a debate about the reliability of purely electronic markets. The existence of skilled floor traders was useful last April when a technical glitch at CME halted electronic trading in 31 commodities, including corn. Floor traders scrambled to fill orders using hand gestures and shouts. To help floor traders with the transition, CME said in a statement it would make booth space available to those who want to trade electronically following the closure of the open outcry futures pits. Traders in Chicago said Wednesday they weren't surprised by CME's move, given the steady flow of brokers and clerks away from the exchange floor over the past decade. Electronic systems have made trading cheaper, faster and more transparent to investors. It shouldn't come as a surprise that this day was coming, given the small amount of liquidity the floor markets have, said Glenn Holland, a managing director with CQ Solutions in Chicago who trades interest rate futures and options from the CME floor. He said he plans to continue trading options contracts there. It's definitely the end of an era, he said. Recent market volatility caught many investors flat-footed. Among the few winners were traders who let a computer be their guide. Hedge fund managers who employ complicated, automatic trading strategies made millions off the wild swings in currency and commodity markets in recent weeks, investors said. Many of these so-called quants, including Leidelbrage's Blue Trend Fund, Content Capital Partners LLP, and R.G. Niederhofer Capital Management Incorporated, performed well because they positioned themselves ahead of market moves that befuddled traditional investors. In many cases, they ramped up bets on the momentum against the euro and reaped a huge win when the Swiss National Bank removed its currency peg, pushing the euro down deeper. Computer-driven, automatic trading strategies score big. So-called quant traders take advantage of volatility.
Page 1. USA. Well, elbow, game changer.
Analysts blow calls on oil stocks in assessing energy companies. Many fail to foresee depth of crude's decline. A worker at a Southwestern energy company site in Pennsylvania in 2011. Raymond James analysts didn't downgrade the company's shares until January, months after the stock and oil prices had begun to slide. Photo, Bloomberg News. In late November, as collapsing oil prices pummeled energy company shares, a Raymond James and Associates analyst told investors that energy stocks were still a good bet. With a barrel of crude having dropped nearly 30% since June, Pavel Molchanov reasoned the worst of the sell-off was likely history. He issued a report contending oil prices and energy stocks were within weeks of bottoming. He and his colleagues maintained the equivalent of a buy recommendation on Houston energy producer Southwestern Energy Company, also down about 30% since June. More than 2 months after Mr. Molchanov made that call, it is clear he and many other analysts were wrong. NYMEX crude prices and Southwestern Energy stock each have fallen more than 20% since Thanksgiving. On Wednesday, U.S. crude oil for March delivery sank $4.60, or 8.7%, to $48.45 a barrel on the New York Mercantile Exchange, its largest one-day fall since November 28, and down 55% from its June high. Energy shares in the S&P 500 have lost 21% in that time. Strategic confusion put Radio Shack at mercy of lenders' bankruptcy filing comes as electronics retailer was forbidden to close as many stores as it wanted. In a commercial last year, Hulk Hogan and a mob of other nostalgic characters stormed into a Radio Shack and ripped it apart, to the refrain the '80s called, "They want their store back." Now it's the creditors who are clawing at Radio Shack Corporation's shelves. As part of the reorganization process, hedge fund Standard General LP has agreed to buy about half of Radio Shack's roughly 4,000 stores, while the rest would be shut. Standard General would run some 1,750 of the stores it buys as co-branded shops with wireless carrier Sprint Corporation. The plan aims to head off the sort of liquidation that claimed Circuit City and Borders, where the inventory was sold to pay off their creditors. Joe Magnacca, Radio Shack's 7th CEO in 9 years, inherited a company buffeted by some of the toughest forces in retail. The business of selling electronics was being pillaged by the web, and a giant bet on cell phones fell apart when Apple Incorporated. As pricey iPhones started pulling the margin out of sales that had once been lucrative for Radio Shack. Revenue was falling, and cash was drying up. Do you remember your first Radio Shack purchase? Was it your go-to store for gadgets, toys, and high-tech gifts? Share a personal story or memory of the retailer. Tokyo. Sony Corporation offered hopeful signs Wednesday that the lost decade for its electronics business may be coming to an end, reporting a more than threefold increase in its quarterly profit and lifting its full-year outlook.
Mr. Patterson. Mr. Patterson.
Rami Aglame, a student at Columbia Business School, left her consulting job in Washington, D.C., at Charles River Associates to work for a designer handbag startup before school began. Photo for the Wall Street Journal. For comments. Plenty of students take it easy after they get into business school, taking time to travel or spending the months coasting at work. A small group is choosing a different path, becoming lowly interns again, working for low wages, or even for free, in hopes of gaining an edge before classes begin. Early bird internships don't always lead to job offers, but for students who plan to switch careers after school, the stints give students a leg up for on-campus recruiting, according to students, recent graduates and admission consultants. And, for those who want to start companies or join early-stage ones, time spent at a tiny, and sometimes failing, startup can open the door to a new industry or give a non-tech person a more digital sheen. The PreMBA experience was once primarily the domain of large established firms such as Deloitte Touche Tohmatsu Limited, Citigroup Incorporated and Procter & Gamble Company that were hoping to attract and develop underrepresented minorities. Now more admitted students are trying to get at least a month, a couple of weeks or even days in at a startup firm before starting school, said Tiffany Showell, an admission consultant in Los Angeles, California. It's a feast for the startups. A tiny fraction of admits try pre-MBA internships, according to surveys conducted by the Graduate Management Admission Council, but school officials and admission consultants say the share is growing. It's just the latest way that MBA recruiting is shifting earlier. That worries B-school career officers, who say students may be narrowing their horizons before school begins. Rami Aglami, a student at Columbia Business School with ambitions for a career in retail, left her consulting job in Washington, D.C., at Charles River Associates to work for a startup before school began. The 27-year-old sought out and pitched designer handbag company Reese Hudson LLC, then a three-person operation in New York, on which she could bring to the team a consultant's eye, experienced in isolating a business's weak spots and developing solutions.
Say you're a finance guy, a farmer, a researcher. You used to depend on experience, the internet, your gut. Today you can use IBM Watson Analytics.
A new study suggests that children need to learn more math, not finance, to be better with money. Harvard Business School's Sean Cole discusses with WSJ's Tommy Rivero. Photo, Getty. Twitter's user growth slows but outlook improves. Twitter Incorporated. closely watched user growth nearly ground to a halt in the fourth quarter, a continued sore point for the company even as revenue keeps surging. The company said it gained a net total of 4 million users in the period, giving it 288 million at year-end. The 1.4% hike from 3 months earlier was the lowest on record for the company and for the first time fell below user growth of Facebook Incorporated, which has about 5 times more users.